Welcome traders, I'm Adam Harris, Chief Market Analyst, and I am just taking you through my plan for the week commencing Monday the 11th of March. First thing I do want to mention is on Thursday I will be off to Bali, which means that if all goes according to plan, this time next week my video will be produced from Bali for the week and there for a trading conference, and very honored and excited to be meeting Kathy Lean and a bunch of other very experienced, talented traders. That's going to be a lot of fun, and that'll be for the week. So hoping to be speaking to you from Bali next week. Okay, so now, right, so this week in terms of economic Canada news, first of all, just because we're watching what's going on with the Japanese yen with that 150 area on the dollar yen, want to be paying attention to the GDP. So this will really be, to me, would be one of the things that would clue us in as to what what might change with regards to their policies, and we'll see what's going to happen there. Then I would say in the UK, just paying attention to average earnings index and bonus. So what you want to see here is, are we seeing a good result there with regards to earnings versus inflation? Then, of course, out of the US, CPI, of course, you can go ahead and look at that. I don't think we need to worry about that for now. The UK, then I would focus on GDP. I think that's an important one this week, Wednesday. Manufacturing production, because we're supposed to be technically in a recession. And, of course, GDP month on month over quarterly effectively. So I want to have a look and see what goes on there. I think if you're in the UK or in Europe, you want to be paying attention to that. And then, of course, finishing off on Thursday with I actually marked the wrong one here. I meant to say initial jobless claims. So really wanting to see, we had a slight rise in unemployment on Friday with the NFP numbers. Again, it was a shockingly good number, surprised the markets. But there was a slight rise of from 3.7 to 3.9 in unemployment. And I want to see what the initial jobless claims say here. Excuse me. My expectation is that they would rise. I want to pay attention to that. That being said, let's go and have a look at the chart. Okay, so here we are. Let's look at the VIX. So just a slight uptrend in the VIX at this point in time. Again, when you look at it from a monthly perspective, there's a little bit of a rise here, but nothing crazy. And in fact, going all the way back even to 2023, when we had a bit of a bear market here, you can see we were still dropping. So the market behavior wasn't fear-driven or panic-driven, just kind of a little bit of a move. Just here, this really being a temperature check for the tolerance levels of the market, and it's absolutely fine. We look here at the dollar index. So we had a strong downtrend this week. We had non-farm payroll on Friday. We saw a nice little solid bounce off that 102, kind of want to say 102.15 level. And you can see here on a weekly level. So we were in a downtrend. We've come up. We've broken that weekly downtrend. And now we're really just waiting for confirmation of which way the market is going to go now. So are we going to get a higher low? Or are we going to get a lower high? What's going to happen? You can see here we're still stuck within the range. And actually, I think it's worthwhile considering that we could be stuck within this range for a while to come. So if this is going to be the case and we produce a swing high here, then it kind of makes sense. If we break the low, we'll continue to head back down towards 100 and test that level again. Let's see how that's how that's going to play out. If we look here at euro dollar, you can see we had a really nice pullback, nice little bullish candle there. On Friday, a little bit of exhaustion showing in, although it didn't really kind of tap the 1.1 level, which I would have expected. So this week, I'm curious to see if we're going to have a bit of a pullback. Will we come back down and hit 1.09 and then continue up? Based on what I see here, it makes more sense to me to see this actually close to the upside by the end of the week. But we could actually see price potentially come back down to 1.05 first before continuing up, or potentially as far as 1.08, not 1.089, I think 1.875. We'll see if that's going to be the case. But for the most part, it looks more bullish than bearish. The same here with sterling. You can see a little bit of exhaustion here on Friday. Potentially what's going to happen is Monday we'll see an attempt to tap, then we'll see a correction. So what I'm really looking for this week is a retracement within the uptrend at some point. The question is, will we get the retracement at the front end of the week or on the tail end of the week, which obviously then changes things. And so that's what I want to see happens there. But for the most part, looking bullish. And I would like to see a retracement to provide some potentially bullish setups. Same thing here with Aussie dollar, US dollar, again, looking nice and bullish. That's a really nice bullish engulfing candle. So for the most part, these ones against the dollar support the idea of a weaker dollar, but they are overextended, and therefore a retracement should be on the cards. Kiwi dollar as well hasn't quite broken the high here, but it is holding in this area. It's actually a little bit range bound at the moment, and producing a bit of a swing low on the monthly days so far. We haven't broken the high of February. So keeping an eye on that, that could be a lagger, meaning that we could see a breakout later on, and then Kiwi dollar could provide some good moves. Dollar yen really had that sell-off, so this was interesting to me just because we had the consolidation, we had that break, the momentum break from that consolidation, and so now you really actually get a sense of where it's likely to go. It's very likely at this point in time, to me at least, that dollar yen is going to continue down, which means that over the coming weeks, potentially and or months, we could possibly see it starting to head down towards 145. It's now more bearish than bullish. Again, this week could provide a bit of a retracement and a shorting opportunity to the downside. We've had a while where we really haven't had much direction or clarity on the dollar. Now appears as though the dollar has chosen to weaken, and that could then provide us some really nice trend-based market moves going forwards. Okay, so again here as well, we've got a little bit of a lower low there. The trend hasn't quite confirmed itself, but looking at it again here on that weekly, what I'll be looking for is a break to the downside, a really nice momentum break with this, and that's interesting because it means that this downtrend here will stay intact. Okay, dollar CAD. So dollar CAD here, again, just overall very, very tricky, and you can see the exhaustion coming in here as well. So this is also another one where I'm looking for a break to the downside. I'm looking for a momentum candle on the weekly. Will it be out this week? We're going to have to see if that's going to be the case. Lots of dollar news as well, which could drive those kinds of reactions. But in terms of economy, not worried about the US economy, just whatever news might just create a little bit of momentum in the markets for us. Okay, looking at gold. So gold has been doing incredibly well. Is it overextended? Absolutely, it's crazy overextended. Seems to be the world we live in now, where the markets don't just do a little bit of overextension like they have in the past. It looks like they go for, balls to the wall, excuse the expression. And so this week, absolutely, am I looking for a retracement? Absolutely. How far back? Could come back down to 2.1. Could come back a little bit further down to these highs over here around that 2.050 level. That would be really interesting. But that would put it around the 5618 retracement level. So it's not absolutely crazy. And the beauty of that is that if it did it in the early parts and then continued up, we could still have a nice bullish continuation to the upside there. This is interesting though. If we did actually come back down that far, then we would have a rejection candle on the weekly. Depends on where it closes at the end of that. So that is something I want to find interesting. Otherwise, I would expect a pullback down towards that 2.1 level, buying opportunity there. Silver. So silver is definitely showing signs of exhaustion in this area. So this looks as though this is very much setting up for a pullback. And down to that 23.41 level, down to the 23.25 level, good buy opportunities here. So let's just kind of mark it. So somewhere in about this area, I'm going to be looking for some buy opportunities. Okay, so that's what I'll be looking for there. That looks pretty cool. If we're going to get that, very quick look at some of the other ones. Copper stuck within its range, needs a bit of a breakout here. We'll see if that's going to be the case. So that's not really following through. Let's have a quick look at coffee just to see how that's going. Again, also struggling, very similar to that. They look potentially bullish, but you need a momentum candle either way. So that's on coffee. Natural gas. Natural gas still stumbling in this area, still continuing to attempt to turn around. So this is where it has that possibility here. Again, potential for a bit of a double bottom. So we've got a slightly lower low. So I'm just going to mark this so that we have it. And actually we've got a slightly higher low here. So that bullish divergence. What would really clinch it for me would be a massive bullish candle that we would see here. That would be something for me that would be a sign that it's going to reverse. A big bullish candle would be a very strong sign for me. Crude oils. All right, so crude oils battling a little bit here. There's not really getting much love. They are climbing higher. They're just not really super bullish. Even here where it broke and retested the bullish candle, didn't continue much, and it didn't break the high of the previous candle. So this is important from the general perspective. If you go back here and you kind of go, what's going on with crude oil in general in this whole area? This whole area here is very, very, very patchy. And price, even though it has kind of started that trend to the upside, it's not finding a lot of love. Look, it's not a bad thing. For normal people, from spending out of our pockets, we really don't actually want crude oil prices any higher, and we want to become independent of it as well. So it's really only kind of obviously certain industries and obviously certain investors who are investing on this, they would hope for it to be the case. But honestly, if it does end up tanking or going lower, it's better for everyone, it's better for the planet. So and it's definitely better for the war against Russia as well. So that I just find at the moment it just kind of struggling a bit, and so based off of this behavior, we could see a bit of a correction further down. Crude oil is going to be very similar as well. It looks just like it's wobbling in this area. It could find some strong resistance here. So what we'll be looking for is really a break of the low or a break of the high. And a break of the high means a breakout. It means it would have to produce a nice little bit of that and do it. It's very flat at the moment. Could go either way. We'll see if the trend is not broken yet. So that's why I'll be watching the low of the previous weekly candle. Very quickly have a look at wheat. Wheat coming down. So historically, wheat looking very, very low in this area. There was that bullish divergence there, and it just subsequently has gone back down. There was a nice bounce, and then it has just subsequently gone. So we don't need these anymore. They can actually come out. Bang, and that's it. And so we're back into that. So all that really resulted in was just a minor monthly retracement and this downtrend. And actually wheat, when you look at that from a history perspective, that is actually very impressive where it is. Okay, it just hasn't been this low. That's going all the way back to the 70s. So Interesting, interesting, interesting. All right, now, sugar, still stuck within the high and the low over here, so nothing really big to say there. Still looking relatively bearish, indecisive, no clear direction per se. We have cotton. Cotton breaking out and then battling with resistance. Oof, the strong rejections over here. Plenty of strong rejections in this area, so we could end up seeing a correction to the downside there. Could end up seeing that. So interesting, commodities a bit twitchy at the moment. None of them looking super strong. Okay, MVPs, global indices, and let's see how we're doing. So one of the things I do want to draw your attention to here, ladies and gentlemen, please, is that there is definitely some bearish divergence starting to creep in here. So if we look at this, the momentum for this is now going more sideways than up, and you'll see the difference when I compare it to the S&P. And then when you look over here, we're generally heading lower. So this is more sort of bearish. What does this mean? It doesn't, very importantly, it doesn't mean there's a definite change in trend coming. What it usually means is that the higher time frame, which in this case would be the weekly, is potentially preparing for a retracement. But already, because it's close to the moving averages, it could consolidate and continue up. So consolidate and take a bit of a breather and then continue up, or potentially have a bit of a correction down towards, say, 38,000. So when you look at it from a monthly perspective, it's very close to 40,000. I would be amazed if one of the things that happened was an attempt to move up and a very strong rejection candle. I would then see that as a confirmation. I would expect it to start to break lower. So it's going to be, especially this one, it's going to be this little level over here. Once we break below that, we would see a move down, clearly down towards 37,783, back down towards these lows here. We would see that move happening. So that is something that I'm just keeping in mind that it could happen. Alternatively, we could stay above the level and then just break out to the upside. So just want to draw your attention, there's a definite shift in the strength or the angle of momentum on that. However, S&P not looking that bad. So the angle of momentum here is still intact, but we did have a little bit of a rejection there close to these highs. So we are stumbling a little bit, and actually it would be really good for us to have a bit of a correction, come back down to that 5,000 level. So let's see if that's going to be the case. This week we could find the markets go sideways, or we could see them starting to hit a little bit lower. And interestingly, excuse me, that could be coming with this. So this is why I'm curious about what's going to happen with that dollar weakness and dollar strength. If we get a bit of dollar strength, we could see this head a bit lower. That's why I say that. NASDAQ angular momentum is also looking good, but it also bumped its head up here. So we've also had a bit of a double top reaction there, starting to stumble a little bit. Again, the question is going to be, it's very close to 19,000. Will it be able to do a surge attempt and then a rejection? We'll see if that's going to be the case. And again, it's also would be great for this to have a bit of a correction to the downside. So it's a little bit too soon to tell, but there's something creeping in. And then the question is going to be, is it going to go sideways or is it going to have that correction? We'll see. I'll be looking for these levels of support for price to break down. Overall, the markets are still relatively bullish to my mind. I feel a little bit sorry here looking at the Russell 2000. Just manages to kind of break out here and it's already battling its head, bumping its head a little bit against that, excuse me. But yeah, it still looks somewhat okay, so we'll have to see how that plays out. So I'm just a little bit more cautious as a trader this coming week, not so much as an investor, but as a trader. We'll see how that goes. Another clue, this is where it gets interesting, excuse me, is when we look at the non-US indices. So one of the things why we knew the market was mostly okay was that even though last year had quite a strong sort of bear market for the US markets, it really wasn't as bad in the non-US markets. And that's a rare thing. So that's kind of what I want to monitor for now. Once the non-US markets start acting as twitchy or as bearish as the US markets in a similar type of situation, then it'll be a clear clue that it's a global thing and not necessarily exclusive to the US. So here I'm going to see, I want to see if we still break out. Overall, it's still maintaining its bullishness and indecisiveness over here. There's still the potential for it to break higher. So what am I saying here? I'm saying, yeah, it would be interesting if the US kind of went sideways, but the UK and the EU continue to maintain their bullishness. So here we had a bit of a pullback and a bullish engulfing bar. Looking at it from here, it still looks okay, but yeah, the rest of the market's going to have a bit of a correction. We could see that happening here as well. And at some point for the DAX it's very close to 18,000. Let's mark that area because that's a very, again, very interesting kind of place for this to be. Let's see if we end up getting there this week. Maybe we'll have that last push to the upside and then have that correction. This is beautiful. So this is the ASX out of Australia. Just a pitch perfect setup there, which I missed just seeing it now for the first time, guys, I apologize, but wow, just an absolutely perfect setup there. No brainer. And already, if you'd got in on that one, break above the high, stop loss below the low, you'd already probably be at 2 to 1 or 1.5 to 1 already. So very nice trade setup over there. Okay, and we've got Nikkei, which is starting to slow down a little bit here as well. You could just see that it's starting to slow down, especially from that high to that high. And so it's also potentially preparing for a bit of a correction. So that, I want to see if we're going to get something similar to that in the near future. We don't need this anymore. That can obviously go. And we'll see if we're going to get a little bit of that in the near future as well. Bit of a correction. 40,000 is right there. And then we've got 42,000, so interesting to me. All right, let's move on to equities of interest. So Apple, I want to talk about Apple very quickly. This 165, 170, 166 level, I beg your pardon, 165, this area over here is a really good place for Apple to turn around if this trend is going to remain intact. So in other words, if we're going to see, actually we'll do it off the weekly, if we're going to see ultimately that this is going to build to a sort of bearish, ultimately a bit of a bearish breakout pattern, I'm just going to draw the line in here. So what I'm going to be doing is watching this area. Do we ultimately fall through it, or does it manage to stay intact and we see price ultimately start to build up? So do we get a bit of a build up, a breakout over here, and then subsequently a breakout to the upside? Okay, do we get that, or do we potentially this week get a break lower? So that is kind of, I mean, that's really the game here. Want to see what's happening over here. So that's very messy on this chart, but it really means, does this level hold, or do we start to break below that? If it holds and it starts to work its way up and it's in a really good area to do it, we could see a bit of a consolidation before breakout. And actually, the optimist should generally give it, it should be like a 55-45 or a 60-40 that it's going to hold and go. That's what I want to see this week. Amazon, back up at all-time highs, definitely overextended. Last time it was kind of in the moving averages. Here was at 125, it's at 175 now. And so that for it to have a bit of a deeper correction now would also be a relatively healthy thing. Is it setting up with a bit of a head and shoulders here? We're going to have to see. So the market could genuinely just, you know, could have a last bit of a push to the upside. I think we are entering a period where a consolidation or a deeper correction, meaning a weekly retracement, down, back down to the moving averages, which we haven't had for a month or two, is, I think now is potentially on the table. Will it kick off this week or next week? That is the tricky part. I'll know it when I see a definite kind of a signal there. Right now, it's the early stages of it. We'll see how that goes. What I mean when I say a definite thing is when I see a strong bearish candle or break of a key level. Right now, what you're seeing is the market is just starting to act twitchy instead of nice, clean price action to the upside. But then you go ahead and you have a look at something like AT&T here, which looks like that's getting ready to keep going. And it's also another sign of a healthy market is when individual equities are doing different things. When they're all doing the same thing, it's very much fear or greed driven. When they're all doing different things, that's generally a sign of a healthy market. Let's have a look at ARK. ARK, I want to see it break out of it. So again, we're still in some of these boxes. We're right at the edge here. I'd love to see them hold. I mean, I'd love to see them break out and start moving. But while that's happening, we see quite a few of the others are starting to run out of steam. I mean, here's a great example of it. Here we get the pullbacks and it takes off and we get a retracement. But look at that. We get a kind of a relatively decent sized, medium sized red candle. Then it goes off again and then you get a bigger red sized retracement candle immediately, 2-3 candles later, even within the same week potentially. That is the market running out of steam. Okay, it's a market running out of steam. So again, the idea of there being, and it's at a 1,000 level, the idea here of a potential correction is, I think, fair to say that it's on the, it's starting to set up for that. Glencore. So Glencore trying to get back in. There was a nice strong candle, but now the trick is it going to be able to get back into the box? And it's taken quite a while to get back. So my immediate instinct is to say that it's going to find resistance, and we'll only know this coming week. If we get a really nice solid green candle back into the box, then it's good. On the other hand, should it fail and close back below this level, then we're looking more and more like we could see this starting to head low. So we're going to have to keep an eye on that one. Tesco, look at that. That's great. We were looking for this. The green box is here as a potential retracement target point for it to go. So it looks as though we have got there, and there's a nice bullish engulfing candle. So that looks good. So I think we can, for now, we can probably shorten the box and bring this ahead. It looks as though we've got exactly what we're looking for here. If you've been watching the previous videos, Also, for those of you who I met on Friday at the London Traders Show, what a pleasure. Thank you very much for having me. It was great. And if this is the first time you are watching my weekly analysis, welcome, by the way. Yeah, look at this. Look at that monthly candle. This is a beautiful break and a retest forming a nice bullish monthly candle of support. This is in the works, but is forming a buy signal. Okay, for a portfolio, for an investment buy opportunity. That's interesting to me. Amex definitely had a really good run. Look at this, could do with a breather. Looks actually relatively healthy so far. So again, any kind of red candles that show up in this area would be a clue that it's probably running out of steam. But this one looks pretty good. It looks better than most of these. Berkshire Hathaway. Okay, so Berkshire Hathaway, we already mapped out where we would expect this to go. Here's the plan. So again, some strong resistance, and we expect it to come back into this area. So this is what I'm looking for, guys. I'm looking for, I'll do it from here, and I'll do it up a little bit here. I'm now looking for potentially one more candle, either indecision or a nice bullish green candle in this area. And then I will be looking for a buy opportunity here. But I would say this, for the record, I also think we should do with a deeper correction. So Berkshire Hathaway has had a really good run, and any kind of a pullback down towards the lower areas, 375, I would consider a good thing. But this is my minimum requirement, and that would be my maximum requirement. So minimum requirement would bring it down to 380, which is just a little bit above 375, 370. So it looked good. Okay, so that looks good. So Berkshire Hathaway, nice little pullback. Remember, we need the pullbacks. As traders, they allow us entries on the weekly timeframes. As investors, they allow us entries on the weekly timeframes as well as the monthly timeframes. For traders, it's a bit annoying, but once they have done their correction on the weekly, you get back in on the daily, and there's lots of daily setups. All right, Coca-Cola, sorry. Coca-Cola stumbling. There's really a battle in this area. Look at that. So move up, pulls back 2 red days, 1 big green day, 2 red days, 1 big attempt, and immediately countered with that. So this is running out of steam. And this area is where it's battling. Okay, it's that particular price, 60. Okay, so that's a tough area. It's really battling with that. So we need to see what happens with it. This looks as though it's getting ready to kind of go sideways and potentially have a bit of a correction to the downside. Sell in May and go away. That's the expression. Yeah. All right, where we at? This is good. Bit of a swing low here, starting that journey to the upside. This is similar to what I was wanting to know if it was going to happen. I think it was with Apple, where we're going to get, where Apple's potentially at this point in its journey. Will we see a turnaround, and will it build up to a breakout pattern? So that's really kind of what I'm looking for here. Will we get a bit of a breakout pattern over here? Let's see if that's going to be the case. But it looks like it's producing that swing low. Looks good. There was a beautiful break and a pullback and a bullish engulfing candle, and that was a signal right there. Anyway, and now we're going to see if it's going to continue up. So that's BP. It's BP, and again, it's crude oil, so we're going to have to just watch what's going with it. But Exxon is doing well. That was a really nice setup. And remember when we spoke about this being a strong bullish buy signal, that bullish engulfing candle looks really good. General Motors, okay, so General Motors, nice little trend over here after a gap up, but look at where it is. It's at the top of this range. It's still at the top of this range. So this is similar. If we go General Motors and we go have a look at, say, which was it? Was it Glencore ARC, which is also stuck in its box here. We need to get them. They need to break out. So this goes back a couple of weeks where I've been talking about where they looked like they were about to break out of those boxes. They haven't got there yet. And the point I'm trying to make here is that even sometimes when I'm making the video, I think, yep, it's going to be this week. And then 2-3 weeks goes by before it breaks out. Or sometimes it just doesn't get out. But and that's really the question, is we still haven't quite escaped them, and I thought we would. Not there yet. JP Morgan Chase, very beautiful, solid, healthy weekly trend here. Very nice. Daily looking good. But this is going to have a correction at some point. And I'll be looking here again for any nice red candles. But 190, 200, will it make it? I think we could argue and say that we're kind of starting to enter a little bit of a danger zone here. And we're going to be looking for this to have a bit of a correction soon. Will it be this week? Let's find out. Invesco. Also very nice, more red candles coming in here, definitely starting to stumble. You can see there's a little bit of a level there. So this is similar to some of the other charts we've seen. I think we're gonna see a bit of an indecision candle there. So this is what's interesting to me. I believe very strongly here we're about to enter a bit of a potential for a weekly correction. What I'm curious about is, will it be a monthly correction? So will we actually get a monthly correction now and then just have a bull market that just runs until September? So Will that be the case? To me, very interesting. So we'll see a correction, a further bigger correction than I'm expecting, but then we'll just have another good run. We'll see. I'm okay with that. If we have really strong runs and monthly pullbacks, that means it's really good for both. It's really good for investors to get in. All right, Adidas. Still in the range, hasn't managed to break out. It did try. There's a nice sort of indecision bar. NFP likely just knocked it back a bit. So will it manage to get out this week, or is it still stuck in the box? What's in the box? What's in the box? I marked that. Why did I mark that? There was a reason, I can't remember. I'll have to go back and look. Slowing down a little bit here. This is getting to a point that's also going to start to show a bit of signs here. So 500, big round number. We're definitely now entering this phase. So this week is going to be one where what would be interesting to me is to see if we get a burst higher and then a failure. So big, strong push higher and another correction. And what you would get then is, for example, like a higher high and then a much lower low here. And if you got that, and a big strong failure rejection candle on quite a few charts, that would be it. You're going to have your correction. And remember that I would then be looking for all this to kind of come back down into about this area. If it was going to do, a bit of a weekly kind of a correction. Otherwise, if it's going to do a monthly one, we're going to see it come back down into these areas. So that is really kind of, I'll put that in the description. I think that's what we need to watch out for. Morgan Stanley is still stuck within its range, produced a swing low, but then failed to break any higher. That's why I put this candle here, because I keep waiting for a candle to be the breakout candle. And actually, I'm not going to count this one. That's also a failure, so it's still stuck within this range. Still stuck within the range. We still haven't had it yet. I don't think we're going to have it this coming week, so I'm just going to keep moving this out. But we could, in fact, you know what? No, we'll leave it for now, but we could end up actually having a red candle break to the downside if it's not going to go anywhere. So no growth there. NVIDIA. All right, so NVIDIA, I marked that because, why did I do that? Oh, because that was an area where I said I was going to leave it there. But look at this, guys. I mean, a massive gap up and a bearish engulfing close. We are definitely near 1,000. We are entering that area. I think it's safe to say we now have our next danger zone. And again, I'm looking to see a bit of a failure here. And where is that next entry area going to be? It's going to be somewhere in around about this area if we get that. Okay, so what does that mean? It means that if we have that correction, we're going to have a pullback as far as 700, 600. Should be reasonable to do that. Lots of signs of that topping out a bit in the markets. Okay, Netflix. Also starting to stumble. Look at that. So kind of a very strong gap up, little bull flag, gap up, pull back immediately. Then it sort of stumbles big up, pulls back immediately. So it's kind of starting to trip up quite a bit. Nice bit of a red candle here. We've also got that. Okay, I've kind of seen enough now to get a sense of it. The market is definitely stumbling a little bit here. PayPal not able to get out of it. It's kind of CTD is a medical term. CTD, it means certainly in the drain. Just means this is not looking like it's going to recover anytime soon. So I don't think we have to do anything until we see something very positive happen. Look at that consolidation and that bearish momentum candle. This is a very strong potential reversal sign, guys. Reversal meaning correction. So Spotify, I think I'm going to call it. I think Spotify has got a bit of a correction on its horizon. And this kind of a move could see a correction down to this area, 220, previous levels over there. That's a particularly bearish kind of a signal after consolidation. I think over the coming weeks, we're going to see a bit of a correction down towards that area. So Spotify, I think that's going to be the case. But Spotify was where PayPal was. So look how well it's done. It's broken out of that spiral. Spider, also exhaustion sitting in. Yep, guys, we're pretty much there. We're going to have a bit of a correction, I think. But this one would really only have to come back down towards the moving averages. So Spider wouldn't have a very big one. FedEx battling in this area, but still looking okay here. That's a higher low, and this is another one of those ones. Are we going to get another bullish buildup? I'm just going to mark those to see if they stay. Tesla. Okay, so let's have a look at Tesla. So looking at it here, this is the potential for a double bottom. Okay, this area over here. Bullish candle, bullish divergence. So we do have that. Okay, so we have that slightly lower low possibility. However, so in isolation, that's what it looks like it could be. And there's your consolidation and your big bearish candle. So very similar to what we saw with Spotify. Problem is, that weekly candle is actually a capitulation. That's a heavy sell-off. And this doesn't look good either. There's no reversal here so far, and it hasn't broken the high. So, and given that the rest of the market is now looking weak, the implication is that this is going to continue down. If there was no other market out there, it's possible we could still turn around and close to the upside, and then I'll be like, that's it, we're going to get out of it. But I'm seeing lots and lots and lots of longer term bearish signals here, not shorter term bullish signals. This to me looks more like it has got 150, 160, these levels over here in its sight. And if the rest of the market is going to go, then it would be kind of like the opposite of a rising tide lifts all boats. And we're going to see this head lower. Vanguard. So it's worth noting, if you're a Tesla bull, for example, that if the rest of the market heads lower and Tesla holds or goes higher, that would be a good sign. Okay, but so far, the rest of the market's been going up and it's been struggling. So that implies that unless something else is happening, it's going to go lower as well. In fact, it implies that if the market gets spooked, people are going to offload the things they think are weakest first. So they'll offload harder on Tesla. So we'll see what's going to happen. We're ending a bit of a patcher, guys. Indecision candle, they often precede a bit of a correction. And here it's not going to be a bad one. I don't think down to 440 at most, somewhere around this area. At most, I would think it could be a small one. So to me, the really, I mean, again, it's that monthly versus weekly. Which one is it going to be? It's supposed to be a weekly one, and then down the line, you have a couple of weekly ones, then you have a big monthly one. But we've had so much bullishness since the markets have gone almost parabolic that maybe it's just going to skip the weekly and go straight to the monthly. Here's a great example of rejection, a failed breakout, and bearish divergence. So usually this would imply that we would see a correction down towards 100. So that's an area where I would now kind of be expecting this to sort of come back into about that area. And it's top of a range as well. So again, very similar behavior. That's Walt Disney. So we're going to have to see if that's going to be the case. But it does now look like it's going to be a market-wide thing. Then we've got bonds are starting to look a little bit more bullish. Remember, we spoke about that. The real clue for me is the EURUSD, which I find fascinating. EURUSD has now broken the downward sloping trend line. This is now definitely starting to look like a potential buy opportunity. If this closes as a green candle, this would then be a potential bull buy opportunity. Bullish divergence, break above some of the previous highs, pull back, bullish candle. That could be the first higher low in an uptrend. Definitely worth paying attention to. And interesting to me that we're seeing bonds starting to climb a little bit, and we're seeing stocks start to struggle a little bit, which could be a clue that there could be a bear market, which is very low on my list of possibilities, as I've already stated, but we could see a big correction. Interesting to me. It could still be a medium-term thing, meaning something that happens for a few weeks, maybe a couple of months. Could be a sell in May, go away, and sell in May and go away. We'll see. Okay, just going to watch this next week to see if that's going to be the case. Cryptos. Also starting to see a bit of exhaustion here. They've had a really good run. The monthly looks okay to me. We're back at all-time highs. That was a really nice break and a retest. Looks good. Is it in a bubble? Absolutely, it's a bubble. The only difference is that this time there's a lot of institutional money in the bubble and not just retail money. Really good overextension. So there's no real signs of failure here on the monthly or weekly. There's just some signs of failure over here. So we'll see how that goes. Ethereum still lagging. So Ethereum still has room to go to the upside. Any kind of pullbacks here. But look at this. There we go. Look at that beautiful example. How do we do this again? There we go. Just a great example of, come on. Oy. Just want to center it. Looks really good. So that would be a really nice place to see a bit of a correction. We'll see if we get it this week. If we get a bit of a correction. Just trying to, I wish I had better draw tools, but that's not PROREALTIME. I just wish I had a better desktop drawing tool. Solana, also, same thing. Look at that. Pay attention. These are usually very big stumbling blocks. This is great. That looks beautiful. You had a breakout, you had a break and a retest. You should see a continuation. The daily is struggling here. So that could mean is that we just have a bit of a correction back down to here. So for fun, just for fun, I'm going to mark that level. So do we get open here, retest, and a close? We'll see if that's going to be the case. Cardano, struggling a little bit here as well. Also struggling there a bit. And Binance. Is it? Yeah, look at that. Just look at that. What a beautiful, just a big boost. So the laggers are catching up. So to sum up, and let's just with cryptos first, is it possible that while the rest of the market has a bit of a mini collapse thing or a bit of a breather, cryptos could climb? They could. They've managed to actually do that in the last year, which has been unusual given the last 3 or 4 years. So it is possible. It's a good thing if any of these markets have a bit of a correction. There'll be a lot of profit taking if that's the case. So do pay attention this week if you see that that's going to be the case, especially if you start to see a lot of wicks and red candles starting to show up in the daily. That's probably a clue that the weeklies, that we're going to have that bit of a correction. But remember that that correction then leads to a potential buying opportunity when the market gets back down. And that won't be something that'll happen like this week and the next week it's done. It'll be something that forms this week and then takes a few weeks to a few months to kind of do, and then it starts picking up again. The market has been going straight up. It's due for a bit of a breather. To look at equities, there's definitely something in the making. Is it going to be a gentle kind of a correction or a consolidation, or is it going to be a much deeper one that's going to come? It's possible it could be a bigger one because we've been going almost parabolic, and often the repercussion of a parabolic move is a bigger correction. We'll see if that's going to be the case. And then when we look at the dollar, I kind of want to know what's going to happen there, because usually it would be dollar strength, which would really kind of kick off, which would knock the market back down. But right now we're seeing dollar weakness, even though there might be a shorter term retracement within the daily at least. So lots of things to look out for here. But the difference is, in the previous videos I've been talking about how strong that bull market is now. Now I'm starting to kind of put the brakes on, starting to watch a little bit less cautious from a trading perspective. From an investing perspective, I'm still of the opinion we're in a bull market, and we're going to always have these corrections anyway. So my bull market sentiment at this time has not changed, but my cautiousness with regard either profit taking or trading, a little bit more cautious on that. On that note, ladies and gentlemen, I want you to have a fantastic week. Please trade sensibly, manage your risk appropriately, and I hope you make lots of money either way.